Your credit score can be the difference of you saving hundreds of thousands of dollars over the life of your mortgage. But what actually makes up your credit score? Before we get into this video, I'd ask if you find any value at all, please like, subscribe, and share this video with a family member or friend, as it'll help my channel grow and reach more Canadians who are looking to learn about the mortgage and real estate industry. Your credit score plays a super important role of you getting approved for a mortgage. Basically, your credit score gives lenders a quick snapshot of how responsible of a borrower you are and how likely you are to pay back the money they lend you. Your credit score can range anywhere between 300 and 900, and the average score in Ontario ranges from 650 to 700. A good way to wrap your head around credit score is to understand what factors actually go into impacting your credit score. So that's exactly what we're going to be doing today. So there are 5 factors that go into what makes up your credit score, and today I'm going to be ranking them 1 through 5, giving them a score of how important they are. So let's get into it. So number 5, at an impact rating of 10%, we have inquiries. When you're applying for new credit, institutions will do something called a hard check when pulling your credit score. A hard check will immediately decrease your credit score a few points and will be visible to lenders on your credit report. Applying for too much credit or shopping around from institution to institution is looked at as a credit risk for lenders. If you want to check your score without it impacting your score, you can do something called a soft check. This is when you're not actually pulling your credit bureau, but you are looking at the score and some of the content through, let's say, your banking app or websites like Credit Karma. Coming in at number 2 with also a 10% impact rating is public records. Public records includes your history of past consumer proposals or bankruptcies that could be considered risky in the eyes of a lender. Not only will they have a negative impact on your score, but they'll turn lenders off when they're analyzing your application and considering lending money out to you. Coming in at number 3 with a 15% credit impact rating is credit history. Credit history details how long your accounts have been open. Lenders like to see a long history of proper credit card utilization, so that's why it's important to get a credit card early on and start establishing credit as soon as you can. In Ontario, you can get your first credit card at the age of 18, so I'd highly suggest on your 18th birthday going down to the institution you bank with and applying for your first credit card. Next on the list is used credit versus available credit, coming at an impact rating of 30%. What I mean by this is how much available credit do you have versus how much of that available credit have you used. Lenders don't like seeing when you have your credit cards consistently near the limit. It brings up red flags in their eyes and you may be looked at as an irresponsible borrower. A good rule of thumb is try to keep your balances under 50% utilization or more if possible. For example, if you have a credit card with an max available limit of $10,000, try to keep that balance under $5,000. The final factor that makes up your credit score, and biggest, is payment history at an impact rating of 35%. Payment history is how well you've paid your debts off in the past. This is why it's important to make sure you don't have a lot of late payments, especially if you're making a habit of it, because this can definitely negatively impact your credit score. Me personally, I like to pay off my balances at the end of each week rather than the end of each month. That eliminates the risk of me having late payments and building up my credit utilization too high. Hopefully that gave you a little better understanding of what factors make up your credit score. Now here's a couple tips on how you can increase your credit score. Number 1, pay off your credit card balances in full every month. Paying off your balances in full will make sure you don't have any late payments, and it'll make sure you keep your credit utilization low. Number 2, don't close old credit cards. If you do close an old credit card, that erases all the history you've built up from that past card. So what I would suggest is keep that card active by using it every once in a while just to keep that credit history on file. Number 3, actually get credit. Lenders like to see 2 trade lines at a minimum of 2 years usage, so the earlier you start, the better. In Ontario, like I said, when you turn 18, you can apply for credit, and I highly suggest you do so, not only to start building your credit score, but to start building proper credit management habits. If you start young, this will also allow you to increase your limits on your credit cards by applying for new cards. Once you've shown your banking institution that you can properly manage a smaller limit, they'd be willing to offer you a card with a higher limit. And my 4th tip is use your credit card daily. Many people look at a credit card as a tool for big purchases that they don't have the cash on hand for, but in fact your credit card should be used for everything. Not only can you start building your credit score, but you can also collect points. 2 benefits that you don't get when you're using your debit card instead. Hopefully you found some value in this video. If you did, please like, subscribe, hit the notification bell, share this video with a family member or friend. I'd really appreciate it because it'll help my channel grow and reach more Canadians. Don't forget, I have those 3 guides to help homeowners and future homeowners navigate the housing market. The first guide is the first-time homebuyer's guide with a homebuyer checklist included. The second is the refinancing guide. If you're considering refinancing to access some equity, fund an investment property, or restructure your mortgage landscape, definitely go get this guide first. And the third guide is you've found your dream home, now you need to obtain financing for it. So if those interest you or you're looking to get better educated about the real estate market, those will be linked in the description below. If you have any questions, make sure to ask them below in the comments. I'll make sure to answer all the questions. And if you want to book a one-on-one call with me, I have my calendar link in the description below. So go click on that, book a time slot, and I'll be happy to answer any questions you have.